Greetings everyone, Joseph James here from SchoolOfTrade.com with your term and quiz of the day. Now guys, if you're unfamiliar, of course, big congratulations to all the raffle winners out there from last week's raffle. We do the raffle once a month. It's usually about the 15th of the month, right in the middle of the month, guys. And here's how it works. There's a quiz at the end of this video. All you have to do, if you know the answer to the quiz, just click on the link in the description that says, I know the answer. Of course, the first 5 correct answers will qualify for free beginners courses, up to 20% off the advanced course. That's an $800 savings. And for more information or to get the rules, email us sales@schooloftrade.com for more information. The rules are also posted in the description as well. All right, here's how term of the day is mental versus physical stops. Okay, term today is mental versus physical stop loss. All right, let's talk more about mental versus physical stops. Now, of course, we already know this, guys, right? We always use a stop loss to protect you against unexpected losses, right? We always use a stop loss to protect ourselves against unexpected moves, things that are out of your control, right? An earthquake hits, a tsunami hits, right? There's a major news release that comes out. There's a terrorist attack, right? Some unexpected event that comes up. Your stop loss is used for that. Now, I'm going to use an example of a physical stop and a mental stop. Now, a mental stop may be kind of a new idea for you, so let's talk more about it. Well, a physical stop, let's say an example of a 6-tick physical stop, is placed in the market for protection. But it's not used as an exit point, right? I don't use my stops as my exit strategy. Okay, stops are a worst case scenario, right? A safety net. Okay, they're not your exit strategy. Now, my mental stop, right, that's my exit strategy. It's the level where the trade becomes invalid. Rarely do we see a trade go -4 ticks against us, right, and then go out and fill all of our targets. Okay, so we rarely ever see that, so we don't really want to wait to see if it's going to happen. We watch indicators for an exit at the mental stop. So a physical stop simply is placed in the market, say 6 ticks back, and when your price trades into it, it'll take you out of the market. The mental stop, again, not a physical level, I'm going to keep my eyes on 4 ticks back. Of course, usually that 4 ticks is where we think the trade becomes invalid. Maybe it's a new lower low or a new higher high, right, against the trade direction. Because basically what we always say to each other, we usually see when price goes against us 4 or 5 ticks, it's usually not going to reverse and become a winning trade. Okay, very rarely does it. So because we very rarely ever see that happen, we shouldn't find reasons to stay in the trade. So we watch specific indicators to tell us when to exit because of that mental stop. Now, why should we use a mental stop? Well, it allows us to cut losses early. Guys, one of the first things we learn as day traders, right? It's kind of a joke, obviously, right? Is right, cut your losses, winners run, right? Easier said than done, right? So much easier said than done, right? It's easy, just cut your losses early, just let your winners run. But boy, very difficult to do that, because as human beings, right, cutting those losses early means we're going to give up on this trade. It means throwing in the white flag, right? Surrendering. I made the wrong decision. I'm out. I'm going to take a loss. So what we try to do is we try to justify staying in the trade, right? We recall last time what happened. Well, one time a friend of mine's neighbor told me about a time when, he went -4 ticks and then it filled plus 100, right? So that's why I'm going to stay in this trade. Guys, it does not work that way, right? Our minds are always going to have an easy job at justifying how to stay in this trade. Well, I think it's going to move up. Well, see those buyers right there? That's the key, right? We're going to find all kinds of excuses to justify staying in. This mental stop removes those emotions, right? And it reminds us, if you made a mistake, get out, right? Or maybe you didn't make a mistake. Maybe you got into a trade and the market simply is not there to give you anything to work with, right? Like today, like yesterday. Okay, so if we're having a problem with cutting those losses early, if you constantly find yourself convincing yourself, right, to stay in these trades, let's remove the emotions, okay, by using the mental stop. Okay, so how do we use the mental stop? We look for price action to slow down, we watch for specific indicators to move against our position, and we look for an early exit to either maximize profits or to eliminate risk, right? Cut your losses early, or this may be, of course, to let your winner run. Now, there are 3 specific indicators I'm going to use. Okay, so a mental stop, right? Your mental stop is placed where the trade becomes invalid. And we're going to use, right, 3 specific indicators to tell us when we should flatten our position. Those 3 indicators are the MACD, right? Wait for that to be against your trade. So if I'm in a short trade and the MACD goes above the zero line, that's against my trade. Short trade above the zero line, those are negatives, right? If I'm in a long trade and the MACD goes below the zero line, again, same thing. It's against my trade, above or below the zero line. The momentum indicator, right? If I'm in a long trade and momentum is pointing down, that's against my trade. And I'm going to watch momentum on my fast time frame chart. Then last but not least, the pace of a tape indicator. If it slows down to red, right? Pace of the tape goes green, yellow, red being the slowest. If we have red pace of a tape, I also want to be cautious and get out of that trade. So we're going to use 3 specific indicators: the MACD, the momentum, and the pace of a tape. When those 3 indicators, right, red pace of a tape, momentum curls against, MACD is above or below against, right? That's when I know my mental stop should be executed and I need to get out of this trade. This may be, of course, before I take any profit at all. It may be while I'm in the red. It may be to finish off a trade, right? Maybe I've already taken all the profit off the table and I'm managing a runner, right? That mental stop could also be used, okay? That combination of those 3 important indicators. All right, guys, quiz time, quiz time. Eyes on your own screen, pens and pads away. Mental stops. Well, they use the following indicators to tell us when a trade is invalid and should be flattened, right? We talked about mental stops, right? Now, mental stops, a little bit different than physical stops. They're going to use 3 important indicators that will tell you when the trade has become invalid and when you should flatten your position. What are those 3 important indicators? Are they dollar index futures? Are they the MACD, momentum, and the pace of a tape? Or is it the time and sales window and market profile? Right? What are the specific indicators that mental stops use? Know the answer? Do you know the answer? If you do, guys, click on the link that says I know the answer and make sure you're one of the first 5 correct answers every time we have a quiz like this, and you'll qualify for free beginners courses up to 20% off the advanced course, an $800 value. And all you have to do is simply answer the quizzes, learn along with us every day, and we'll do the raffle at the end of the month. We'll see you guys back here tomorrow morning, 7:45 in the live trade room. Don't forget to come join us for that. And if you guys have any questions on the way, it's sales@schooloftrade.com for more information. Hope the video helps. Hope you learn more about mental stops. And we'll see you guys tomorrow in the room. Bye-bye for now.